Now, mergers helped keep investors excited today. Here to talk us through how the deals might play out, which ones make sense and which ones could face difficulties, which ones are taking a long time, which ones do you buy right now, even if the spread doesn't look that great, is Nancy Havens-Hasty, an influential woman on Wall Street. She brings nearly 4 decades of experience to the table. She is president and founder of Havens Advisors, focuses on merger arbitrage there. I once heard the first female investment banker on Wall Street.
Oh, that actually is true.
Well, congratulations on that. Let's talk about, though, you run your own shop now here and do merger arbitrage. So much to go through today that we spent like a half hour on the phone already talking about it. Let's start with, what do you think is the most interesting deal? Because we had the DynCorp deal to talk about today. We had the Mirant RRI deal. We had Palm speculation. Airlines are still in play.
Sinopec, a lot of stuff.
Right. Probably today, I guess. At the end of the day, we did invest in the Halliburton deal. And the reason we did that was because it actually had a fairly decent spread, and there are potentials for other bidders there.
Halliburton bought Boots & Coots, or is looking to buy Boots & Coots. Is there a chance that you see another bidder come in and raise the stakes there?
Well, there's been a lot of activity in the oil and gas area, and especially with oil prices where they are today. I think we are in a market where you're just going to see more and more activity. So we don't see any obvious people. Schlumberger was mentioned, but Schlumberger is not all that likely because they're currently involved in another deal, Smith International. But I did think that you never know who's going to want to bid for a company. And what's been going on in the merger market almost completely, where we've been making a lot of money, is by buying relatively uninteresting spreads and then having an overbid come.
Nancy, what about the other? One I want to bring up is Palm, because it's been talked about for weeks and weeks and weeks in terms of whether or not it was a target, and now we hear that they're hiring Goldman Sachs. Anything interesting kind of in that situation?
Well, we don't generally participate in pre-deals, and this is clearly a pre-deal. Especially
may not be a deal, right?
Right, especially ones that we don't think are that attractive. I mean, they're sort of last of the major suppliers of smartphones, and their products aren't particularly interesting, and they seem to be way behind the 8 ball. So it's not clear to me who would want to buy them.
Well, let me ask you, and when you see them, because like I said, they've been talked about for weeks and weeks, and we've seen the stock move on kind of some of the rumors of speculation. When you hear them finally say, okay, we're hiring Goldman Sachs, what is it? I mean, does that mean to you that maybe a deal is more likely or less likely?
Oh, no, it is more likely than it was, a month ago, because they have sort of said, okay, we're for sale.
Right.
So if anybody's interested in them, they will come. But unless we see the possibility, at this stage, the only way we would invest in this kind of a situation is if we saw multiple parties wanting to bid for them. One party is not enough.
Not likely, though, in this situation?
Well, I think it could happen, but to me, it's just not that attractive a property.
Well, and Adam told us before, he showed us the stock at almost $7 a share for Palm, and he said the guys he's talking to say it should be worth 3 or 4.
Right.
So if that's the case, you don't want to be involved in that deal unless you're on the short side of it.
That's the problem with pre-deals. With pre-deals, they almost always are at a huge premium. If the market takes a tumble, they go twice as far down as anything else.
Let's talk about Mirant and RRI, because you say RRI may be a merger candidate even itself, and you were thinking about, when we spoke, I guess around 1 or 2 o'clock this afternoon, taking positions in both of those.
Right. At the end of the day, what we have probably decided to do is to go into the bonds. We did nothing today. There wasn't anything very interesting. This is clearly a cost containment story. You're going to get a lot of money out of reducing costs when the 2 power producers are combined. I don't know. It's just not that interesting. There are other people who could come. We did think, because both companies are likely to increase in price, of taking a position in both of them, just because the synergies are very, very good.
We got to talk. We just got a few seconds left here about airlines, because that was a lot of talk last week. U.S., United, Continental. We talked to was it Bob Gorman?
Crandall, right?
Crandall, yeah. Rob Crandall, forgive me.
Right.
And he kind of liked the Continental link up better. I mean, what do you see in this situation?
Well, I think this time they might finally get it done. They were at the altar.
You're talking about U.S. United.
U.S. Air United, yeah. Right. U.S. Air were at the altar, and United were at the altar in 2000, May of 2000, abandoned the deal in July of 2001. Partially because the Justice Department said they were going to sue, along with a whole bunch of state antitrust chiefs, and because labor was a big problem. The labor problem has pretty much disappeared. The two companies have both been through bankruptcy since then.
Right.
Similarly priced labor contracts, lowest in the industry, both members of the Star Alliance,
makes more sense.
both use the same fleets. One is, I think it's United, is 23% smaller, so you have less of a problem. Problem is in Washington, though, and that's where the regulars are.
And you say this one's going to take a while, too. Nancy, thanks so much for joining us.